I think calling it a tough quarter when you lost almost $500 million might be an understatement. And yet, it was a tough quarter for a lot of companies and the industry at large, right? It was when we really felt the going off the cliff, if you will. It had been slowing down before that, but it's when we really felt it. It was interesting to hear that a lot of those losses or that downturn was acutely felt with their Anywhere integrated services, which is actually a mortgage, title, and insurance division that was formerly known as Rheology Title Group. They suffered in that area acutely because of mortgage rates in particular, right? And the closings associated with those. So you start to realize that for these really big companies, Bruce, that have a lot of ancillary businesses that are attached to the real estate industry, that when it's really good, it's really good for everybody. And when it's not so good, it's not so good for everybody. And that means the gains and the losses can pile up pretty quickly.
I don't know, Chase. I would have a hard time getting on a screen in front of an audience of investors and shareholders and analysts and being upbeat about losing money like these guys do.
Well, yeah, I mean, you want to talk about the eternal optimists. These must be some of them. And I guess I can appreciate that. But, frankly, you lost $27 million in the fourth quarter of 2021, which we know was one of the best fourth quarters in the history of the industry, both in units and volume and commissions and ultimately all the things that drive revenue. So that's a tough time to be losing. If you've lost this last fourth quarter, you might just kind of be in the middle of the pack because a lot of people lost money in the last fourth quarter. But you go back one year and it's like, whoa, wait a second. You lost a bunch of money when everyone else was making money.
To take us back to last week when we were at Family Reunion and we reported on Gary's vision speech, basically what we're saying here and what we're experiencing is a 30% drop in units over this 2-year period. That feels scary as all get out. And yet, based on the current median sales price, we could have the third best year in closed volume, which means that there are people who can make more money this year than they've ever made.
Yep, that's exactly right. Matter of fact, the median existing home sale price increased 1.3% from a year ago to $359,000. Prices still going up from a year ago. Prices climbed in 3 out of the 4 major regions in the United States, falling only in the West. So that's kind of our neck of the woods. It's something we want to keep a close eye on.